successfully nominated as a leading tax advisor by Euromoney in the last decade. Our second panelist, Mr. Amitabh Khemka, is the lead partner, Global Indirect Taxes at KNAV. He has over 20 years of experience in the area of indirect tax. His core areas of expertise are tax cost optimization, tax efficiency opportunities, transaction structuring and supply chain mapping, risk mitigation, and much more. He was a member of the Working Group on GST, a subgroup of the Empowered Committee of State Finance Ministers in India. Joining in to give an industry perspective on the Union Budget 2022, our third panelist for today is Mr. Rakesh Gupta. Rakesh is a qualified chartered accountant and company secretary, having vast experience in the areas of direct and indirect taxes. He is currently working as group head taxation for an Indian conglomerate RPG group. He is currently taking care of direct and indirect taxes of all RPG Group companies, which include KEC International, SIAT Limited, Zensar Limited. Previously, he worked for more than 2 decades with Aditya Birla Group and was heading the tax function for various manufacturing as well as financial services business. Our next industry panelist for today is Ms. Kavita Kulshrestha. Kavita is a qualified chartered accountant and tax professional with over 25 years of work experience in corporate taxation, international tax, transfer pricing, assessments, litigation, and business restructurings. She currently heads the direct tax practice for Capgemini India and is based out of Bangalore. Prior to her current role at Capgemini, she worked as the Group Manager Taxation at iGate Global Solutions, where she assisted the counsel at various levels at ITAT and High Court in the litigation matter of iGate at Pune ITAT. Before I hand it over to Taxsutra's Group Editor Arun Giri, I would like to take the opportunity to apprise you all that in the last 10 minutes of the session, we will host a Q&A session. For this, you may post your queries in the Zoom chat box. With this, I now hand it over to Arun.
Thanks so much, Tanaya, and always good to start on time. And that never happens when we are offline. You know, we've done so many of these conferences. I still remember this was almost 14 years back, 13 years back, when the day after the budget, Udayba and I took off on a flight. He was the head of tax at a Big Four. And we were in Delhi the next day, and we had 500 people in a 5-star hotel attending a post-budget seminar. Those were the days. 12 years hence, you know, one of my friends tell me that every cycle lasts 12 years. He's a chartered accountant and astrologer, so that cycle has also lasted, I think, 12 years. We are in the hybrid mode. We don't know when we will again see 500 people in an auditorium for a budget seminar, if at all. Especially when you have this convenience of logging in at will from the comforts of your homes. Many of you all might be having a morning breakfast right now. We had a wonderful idli, and I think that's a good cuisine today to have as we start the breakfast. A light breakfast is always good when you start a webinar. The day after a webinar, the day after the budget is when some deep thoughts strike you. So this morning at 6:30, one of the legal luminaries, messaged about his thoughts on the budget, and I was tempted to call him at 6:45 in the morning. And he said, "Have we missed the woods for the trees once again?" And of course, then we went on to talk about a lot of customs-related amendments, the anti-dumping duty, some retrospectivity in some of the sections, trying to undo the canon Supreme Court judgment, and so on and so forth. But any budget always produces two sorts of amendments. One is substantive. The second is really the fine print. The substantive has a huge impact for Rakesh and Kavita all, whenever it is substantive, like we had the goodwill amendment last time. The fine print is what keeps Udayba and Amitabh busy through the year. There is a mix of both this time as well. On the substantive part, you have updated return, the scheme for taxation of virtual digital assets, and I wonder how many of the participants here are into crypto. You have the long-term capital gain surcharge capping, and a plethora of amendments on the charitable trust side, on the faceless side, and a lot of procedural amendments which will ensure that we burn the midnight oil for the next few weeks. And this might be my 18th budget. 2004 we started with at CNBC, and every time after 5 days we suddenly uncover something new. When you look at the same section for the fifth time, it is like the CA final exam. You've read that provision, you've read that that chapter, but when you read it for the fifth time, you relook at it, you think of the same section in a very new manner. And that is what currently, Amitabh, I must say, the government is doing with the GST law. The sort of amendments and that have come, I'm sure I have spooked corporate India. But just to set the high level context before we hear from all the panelists, robust tax collections. We are coming off a brutal second wave, but a receding third wave. Economic activity picking up big time. Rural India does need a fillip. Employment needs a fillip. So you had three cornerstones: elections, pandemic, and the economy. And many thought this would be an election budget, including me. That does not seem to be the case. This is not an election budget with an eye on the 5 states which are going to vote in the next 15 to 20 days. This, in fact, if at all, if you could give some credit to the finance minister, that it's a budget probably which has not done any damage to the sentiments, at least to that extent. But there is a lot to talk, and that is what we will be doing over the next 90 minutes. We will first hear from the panelists, then Uday Bhai will make a presentation on what are the key highlights on the direct tax side, and Amitabh will tell us on the indirect tax side. We thought there wouldn't be much, but there is a lot on the indirect tax side. And then we will have a freewheeling panel discussion with our panelists. So straight off, Uday Bhai, Amitabh, 45 seconds each. Your first thoughts on the budget. What are the hits? What are the misses? 2 hits, 2 misses.
So I think growth-oriented budget, stable and predictable tax policies, which is very important to plan on a long-term basis. Change in capital gains, the surcharge part will give a lot of relief to M&A transactions. If I say in terms of the misses, maybe there was a lot of expectation by common man and people at large in terms of course, yadil mange more. All the time you want to, have concessions and everything. So maybe that part could have been done to an extent because the tax collections are pretty robust. There's a tax buoyancy. I would have expected a little bit of a change on the cross-border mergers, specifically because a lot of Indian companies are accessing the foreign markets right now, not by listing the companies, but through a SPAC reverse demerger. So that part possibly could have given a fillip to even cross-border mergers. But other than that, overall, very positive, growth-oriented, and more stable from a tax policy perspective. There is a path. So certainty is what foreign investors and even the Indian large investors wanted.
Perfect. Amitabh?
So if I look from the hits perspective in the customs, the government had taken a task of looking at 300 exemption notifications. And what is noteworthy is they have fulfilled that task. We'll go into details later. But that's a very important perspective that they have looked at the entire exemption regime and eased the customs law when it comes to exemptions and the rates. On the misses side, I would say from a tax administration perspective, it looks that it is going to be very tight in the coming year. The administration aspects seems to be tightening the bolt rather than easing the bolt.
Rakesh, from corporate India's point of view, I'm sure you'll be making a presentation to your group. What are going to be the 1 or 2 highlights that you can share here from that presentation, Rakesh?
Yeah, thank you, and good morning to everyone. Yeah, Arun, I completely echo with what Uday Bhai and Amitabh said actually. it's a very, very forward looking, and I think government intent is very clear that they want to ease of doing the business and want to reduce the litigations. So I think there are certain steps which has been taken in the budget, and if those are implemented properly, I think it will go very long way in reducing the litigation and easing that entire tax administration.
Yeah.
Though there were a lot of expectations which partly met, partly not met. So that is part and parcel of every year's expectation and what we get from the government. Yeah.
But from a corporate India point of view, India Inc., Rakesh, any one or two amendments which over the next 15 days you will be studying very closely and talking to Uday and Amitabh.
So I think that one of the major amendment is regarding this updated return, Arun, and I think the other is that we'll be closely looking at the entire changes in the faceless assessment regime. So I think
Wonderful.
that is the two things which we'll be closely watching, and there are certain amendments which are GST, which is area of concern, which will be very talking point.
Which we will discuss over the next 90 minutes.
Yes.
Perfect. Kavita, good morning once again. And Capgemini comes from a different sector, a sector which has been buzzing over the last 18 months. One of the big beneficiaries, I would say, of the pandemic. Kavita, union budget, were you expecting something in the first place? And if yes, has it delivered up to your expectations? Yeah, we are not able to hear Kavita. Tanaya, are we able to hear Kavita?
Yeah. Good morning. Can you hear me?
I can hear you, Tanaya. Kavita, can you hear me?
Yeah. Can you hear me now?
Yeah, we can. Kavita, please go ahead.
Yeah. So I was telling on a union budget perspective, I would say it's a progressive, people-friendly, and it also focuses on development. More infrastructure, more investment, more growth, and that is the agenda of the government, I feel. And that was in need of the hour, especially at a time when the country is really fighting the pandemic. And really appreciate that the government is going to outlay almost 10.68 crores in 22-23 on various capital and infrastructure projects. While I agree with Rakesh and everyone that there has been absolutely no reduction in the tax rates or the changes in tax slabs, which the common man was expecting because of the hardship that the people are facing due to pandemic. But of course, as far as boost to the economy is concerned, there are many innovative measures which the government took, especially the issuance of digital currency using blockchain technology, so on, which I feel will give a big boost to the economy. Now, coming to the expectations or coming to the IT industry perspective, IT industry was expecting that there would be some clarifications which the finance minister would issue around the new normal and the work from home, especially from the SCZs and the tax holiday perspective, which is a miss because the IT industry per se, we have been lobbying through NASSCOM for the last 2 years to come with a clarification. So that is one miss, which is a very big miss for us because we were very hopeful that some clarification would be issued on that front.
Yeah, Kavita, the IT industry must really send a large bouquet and a present to the finance minister that the software judgment has not been undone in any way.
Absolutely, absolutely. So, like this one, education cess has been undone now, which impacts us. Of course.
Exactly. So we'll talk about that as well, Kavita. We've had the initial reactions from the panel. We have almost 400 participants for this webinar. All set now. Next 70 minutes will be action-packed. You will not miss a single, not a controversial issue. You will not miss a single issue that needs to be decoded, will be decoded right here over the next 70 minutes. Uday, over to you for the key highlights from the direct tax side in this budget.
Thank you, Arun. And let's just straight go to because there's a lot to talk. When I looked at yesterday when the speech was going on and there were not too many changes. I think the part 1 was 1 hour exactly, and part 2 was less than half an hour, I think 25 minutes.
55
and I thought
minutes. Sir, part one from the start to end.
50.
That
Yes.
FM started 53.
53. Okay, so I thought 1 hour. Maybe I'm little outside the range of pricing,
No,
but
the
less
reason
than an
why I
hour,
mentioned
and then
Uday is the reason why I mentioned is
yeah.
because 2 years back, part
Yes.
B started
Yes.
at 1:55, at 12:55. Today it
That's true.
started at 11:55 yesterday.
That's true. So I think it kept the word of closing before 12:30. And then I was thinking what's going to talk. And when I look at memorandum, it is 199 pages. So there is always a lot to talk, and maybe for good reasons. When I looked at the detailed memorandum, it gives a lot of perspective rather than the fine print. Not many surprises, certainly from direct tax perspective. There are some in indirect tax. But let me just go straight to some of the key highlights. The tax rates are unchanged, and no new tax burden is a good news. That's how I look at it. Because what you want is a stable, predictable policy and a certainty in taxation. So we have seen this path over last 5 years now, I would say, right from 2015, when the rate for corporate was 35, brought back to 25 as promised, maybe a year here, 6 months here and there, and then 15% tax for new manufacturing companies. And since then, we have seen the falling tax rates, moderate, more compliance, bringing more collection. GST, great initiative. It is really yielding results. So from that perspective, tax rates unchanged is a good news. Surcharge on long-term capital gains on transfer of any capital asset has been now kept at 15%, and that will see a big impact. Certainly, when I looked at residents, where the tax rate is still 20% for shares or for many other assets, there is a delta of 4.5%. For non-resident, maybe 2%. So it's a good saving in the tax rate from 28.5 at the peak to now maybe 23, 24%. Alternate minimum tax for cooperative societies reduced to keep at par with 15. Not much of relevance to this audience. There may be specific company who might be impacted because of that. And surcharge on AOP again kept at 15%. So I think there are more tweaking parts to make it in line with normal realities. The biggest part is updated, and Rakesh mentioned that updated tax return that one can now file within 2 years. If you look at this journey, has been going back and forth. We had 2 years, then became 1 year. Now it is 9 months. Once somebody looks at it from a normal time, the memorandum does talk of 5 months time or a 2 month time or a 1 month time to do the revised return or a belated return. From there, this concept of an updated tax return is a great idea. Possibly will reduce litigation, or more important, I think it will kill litigation before even it starts. And that's all I think seems to be the the idea here, that you have 2 year time to file an updated tax return. An interesting part, whether you have filed the return in the first place or not, even that is also covered. And by paying additional tax of 25% if you update within 12 months from the end of the assessment year, or 50% if you want to file an updated return between 12 and 24 months. Of course, there are certain exceptions, search and seizure cases, and if assessment is pending, and so on and so forth. But if there is a genuine error which has been made, and if there is a miss, rather than tax department finding in the assessment, and then see, this one question which keeps on coming, and to all 4 panelists, I'm saying more because I'm on a consulting side. A non-resident or a foreigner will always ask this question: is there any way to kill litigation in your country? Is there a settlement of tax disputes? And it is never happens. The first dispute gets settled at the tribunal level. Otherwise, then the question of law goes to court. Now here there is a first time there is an opportunity to kill the litigation before 143.3 as the first assessment level. And a good sign in terms of voluntary, it will increase voluntary compliance and possibly reduce or minimize the litigation. As I mentioned, there are some exceptions on that. And certainly, if any updated return results into a loss to the revenue, that is certainly surely not covered here. Next, please. The other major change is the taxation of virtual digital asset, as it is worded. We call it in popular term cryptocurrency. Now, interestingly, I think there were a lot of discussion before the budget, whether this will come, not come. The fact that RBI still has to take a view, a government has to take a view itself, whether this cryptocurrency is a legal asset, not a legal asset. Matter has gone up to Supreme Court. So the policy in that regard needs to be framed. But what the government seems to have done it, look, from an income tax perspective, the tax authorities don't care whether this asset is legal asset, illegal asset, accountable, not accountable, part of black money. We don't know. Income, if a resident earns income, she is taxed on a global income, period. And so rather than leaving that tax part, the taxation of this virtual digital asset, and it has been defined separately from capital asset. Interesting. I'll come to that. Revenue Secretary post budget did make that some comments on that to say that number of people have not even accounted. There is a concept of a schedule of foreign assets for the resident tax return. Number of people have not accounted. Some have accounted in some, in grouped it somewhere else. So people are worried today what will happen to that. But as far as the tax authorities are concerned, they are losing out on the tax revenue. It's like any other asset or any other property which is earning income for you, and you should pay the tax on that. Interestingly, the term virtual digital asset is separately defined under section 2 subsection 47A, different from 2 subsection 14 which defines capital asset. So one key point is that virtual digital asset is clearly not a capital asset. Okay, it is separately defined, and when you go through the definition, it is very extensively worded. Essentially, it talks of all kinds of cryptocurrencies. It excludes 2 things. One is the Indian currency, second is the foreign currency. So clearly, it is not a recognized currency either in India or foreign. Please remain on the slide, please. I think we have moved to, yeah. And an Indian currency or foreign currency as defined under FEMA. So anything other than that is a virtual digital asset, and the tax rate on that is 30%. Now, interestingly, when you go to the section which says that the tax is 30%, but that's a base rate. The way I look at it is the maximum rate can go up to 43% with surcharge. And here, unlike for capital asset, where the surcharge is kept at 15, our view is, reading the fine print, that here the surcharge will still be 37 at the peak. And so, unlike capital asset, on a virtual digital asset, the tax rate can effectively go up to 43% with 37% surcharge. That's our view, reading the fine print. No deduction to be allowed other than, of course, cost of acquisition, loss not to be carried forward or not to be set off, because this is an anti-tax avoidance kind of a measure, to an extent a SAR, specific anti-avoidance rule, rather than GAR. There is, of course, a TDS of 1% which has been introduced for transfer to a resident, on transfer of another VGA to a resident, just to keep a track of what's happening. Interestingly, a lot of people would have invested this to LRS, whether it is accounted, not accounted. RBI doesn't care, has never bothered about where the LRS money goes, and so it is difficult to track. How RBI will track this, how people will come back, will be a question. But to me, it looks like the maximum rate still will be 43%. Next, please. Again, another anti-avoidance provision, which is a bonus and the dividend stripping. Right now, section 94, subsection 8, only takes into account the units of the mutual fund. Now it has been extended to all kinds of funds, InvITs, REITs, AIFs, etc. So the bonus stripping will, and is also been extended to securities. So exactly like the units and shares, only it also include now all the securities. You can't take advantage of this. Again, this is an anti-avoidance provision. Government is very keen to promote IFSC. We have seen this over last 2 or 3 years, although the IFSC has been in place for last 5 or 7 years in 2013-14, it has really picked up in last 2 or 3 years. There were enabling provisions in the last year to move funds, offshore funds, to IFSC, trying to treat IFSC as another Singapore or New York or London kind of or any other good offshore fund sector. And certain more advantages have been given to non-residents for transfer of offshore derivative instruments or over-the-counter derivatives, which has been entered into with offshore banking unit. This is again exempt because they would be. It's just trying to keep at par with the offshore center in other parts of the world. And then if any income is earned from portfolio of securities or financial products or funds, which is managed by a portfolio manager based in IFSC, again, to that extent, accrued and arise outside India is exempt. Angel tax extended to AIF category 1 and 2. Royalty and interest income, which was till last year on the aircraft, which was included for the lease of aircraft. This year now they extended to ships also. And income arising from transfer of ship leased by FC again is now going to be exempt. So they are linking aircraft and ship. This is more to address, if you know the treaty like Ireland, where a lot of aircrafts were leased in the past, and also of course maybe the ships there. So to address that part. And this amendment of course will take into effect from next suspend year, next financial year. So again, enabling provisions to make IFSC a hub for the financial center. And we have seen talking to even authorities in last 6 months that they are very, very amenable, very business friendly, treating you like a client. And number of banking companies, financial services, insurance was added now, reinsurance has been added in last 6 months. Even the auxiliary services like the consultants, the chartered accountants, the legal firm. So they are setting up an entire ecosystem, and the government is really promoting the IFSC in that sense. So these are the enabling provisions. Next, please. Some some provisions on a TDS, again, some of them to make it amenable to the current rules. Don't want to get into a little bit on this. And again, some measures to reduce litigation, making tax administration, reducing repetitive filing of appeal. Again, a great step, I would believe so. That if there is a question of law pending, just come up in a particular case, and it is pending at a high court on a similar fashion, and till the Supreme Court gives a decision, rather than fighting this existing case, you can keep the appeal in abeyance, of course, with the consent of the taxpayer or the assessee. But this will again reduce the litigation. Tomorrow, if that case was to come up in favor of a taxpayer, then this appeal would anyway lie down. So good change on the filing of appeals. ABC cases, some of this, again, we will see reduction, some measures also on the cross-border IBC cases to make it operational. And the GIFT City, interestingly, we will see International Arbitration Center being set up for the timely settlement of the dispute. So we now have a specific authority called IFSC-A, IFSC Authority, which consists of members from SEBI, from RBI, from company law. And now you are setting up an arbitration center. Very, very important, because ultimately if the dispute go, where will the taxpayer go, right? You want a single window clearance. So as in Singapore, the arbitration will be announced like within few weeks. So GIFT City again is trying to replicate some of this. And again, a great step from a larger tax dispute settlement perspective. Business or reorganization, some small issues, leave it on a successor entities. Just go to the next, please. Some inadmissible expense on section 37 again has been put in more to keep it in line with a normal law. Some cases being health and education set on 48.2. Some changes have been announced on that. Yeah. again, I would leave this because again, these are the measures to reduce tax litigation and make tax administration more trust in the institution. Again, this is slide we have put in more for the knowledge, but not many people would have an interest on this, so move to that. Some TDS provisions, as in on government, is always trying to make sure that there is a tracking. Some being aligned, like stamp duty on immovable property or the actual value, whichever is higher. And as I mentioned about the VDA, the virtual digital asset, more a tracking mechanism to do that. Some COVID relief measures for people who are receiving money on illness or on the death of a person. So this is a good change from that perspective. The expectation was also on the COVID expenses being deductible or not. That has not come. But from a recipient perspective, it will be outside Section 56 and not taxable. Startup holiday, again, there are some enabling provisions for the startup holiday to get more people into getting the holiday. The extension has been done by 1 more year if the company is formed till March 23. Currently, it is 22. And something similar happened also for the new manufacturing companies, where you are given 1 more year. So I think this maybe broadly takes into account the direct tax. I'm aware of, we want to maybe focus on the panel, but before that, Amitabh, over to you in terms of giving the key aspects of indirect tax.
Thank you, Uday. Just to check, Uday, I'm audible?
Yes, clearly.
Thank you, Uday. Arun did mention at the outset that the tax collections are buoyant, and just to reflect from an indirect tax perspective, whether the tax collections are buoyant, and when it comes to look at buoyancy, it is good to compare with the direct tax collections. And if you look at the orange line on your screen, it has just kept on moving up, including in the pandemic year. So in 2021, we see that though the income tax took a dip, but the indirect tax collections never showed the dip, even including in the pandemic year. So the question which arises is that how come during the pandemic year, the GST collections were down, but overall indirect tax collections were not down, and they kept on growing. So if you look at in the pandemic year, it was 10.8 trillion. In the revised estimate for 21-22 is 12.7 trillion. And in the upcoming 22-23, the budget estimate for indirect taxes are 13.4 trillion rupees. If you look at the growth, we look at again the indirect taxes has kept on growing. In the pandemic year, it grew at 12.7%. Revised estimates for 21-22 is 17%. And when the economy is going to grow at 8.5%, why should indirect taxes grow only around 5.7%? That's a question which should come up immediately, that economy is going to grow at 8.5, direct tax collection is going to grow at 13.6. Then why should indirect tax be so sublime? The answer is in the details. If we look at in the pandemic year in 2021, the GST collections actually shrinked, but what helped was the lower cost per barrel, and because of which the excise duty collections were higher. And the same thing continued in 21-22. If you see the excise duty collections, it is 3.9 trillion in 2021 and 21-22. The budget estimate for 21-22 was 3.35 trillion, which they have continued in 22-23 also. So if you look at the overall indirect tax, the GST is going to grow at 15.5%. And because the excise collections are not showing a growth, or they have been conservative to take the last year budgeted estimate, that's why on an overall basis, we see indirect tax to grow at only 5.7%. Otherwise, GST growth is estimated at 15.5%. Coming to the legal aspects, let's look at the first provision. When GST law was introduced, the GSTR 1, GSTR 2, and GSTR 3, these were the three returns thought about. 1 would be output, 2 will be input, and 3 would be your net return. But that never got progressed, that never started. Later on, the thought process was that let it be a business aspect and let there be a two-way communication between the seller and the buyer, and let the seller and the buyer as a business process match their credits. What we have seen on 1st January 22 in the rules itself, the provision was brought in that now you can take the credit only basis an auto-generated statement called as Form GSTR 2B. Now that Form GSTR 2B is proposed to be institutionalized within the enactment. So the first amendment they are proposing is that input tax rate can be availed only if it has not been restricted in the details communicated to the registered person. There is a new provision also enshrined to say that what is the communication, how will the communication happen, what it will contain. Largely it will contain the details of inward supplies, the details of input tax credit to the recipient, and it would be an auto-generated statement. So having not began with GSTR 2, where the business would have done the acceptance of the credit, that never started. The two-way communication process, which we popularly call as GSTR 2A, now that is to be done away with, and GSTR 2B is already enshrined in the process. Now it is coming it in the law also. The second change is qua the time limit for availment of input tax credit. I will combine the next one, which is issuance of credit notes. There is also one more provision not on the slide for correcting the errors. Now, all this was stated to have you could do after the end of the following year by the due date for filing the return of the month of September. So if you had to take input tax credit for the financial year 21-22, generally we would say that you could take it till the due date of the September return following, which is the 20th October 22. Same thing for correcting the errors, and same thing for issuance of credit notes for supplies made in 21-22. Now this date is proposed to be amended to 30th November. Now the question which arises is that you will claim the credit in your returns. Now, for the month of October, you will file your return. The due date of filing the return is 20th November. The question which comes up is then how I am going to showcase that I have taken the credit on 30th November. There are two thoughts which prevail. In our earlier indirect tax regime, we would say that the entries passed in my books of accounts were corroborative evidence of having taken the credit or having availed the credit. There's another thought that in GST, the only evidence of taking or availing the credit is when the entry is appearing in your electronic credit ledger. And that only comes from the GSTR 3B return. And if that being the case, then your October return, which is going to be filed on 20th November, will practically become the due date. And possibly we may not be able to see the 30th November unless certain returns are getting delayed. And instead of 20th November, you're filing by 30th November, then yes, that date will be available to us. The another important amendment which has been made is that GST credits are currently being taken. I'm emphasizing on the word taken on provisional basis. The taking of credit on provisional basis, that concept has been done away with now. That is what is proposed in the law. Now it will be only on self-assessed input tax credit. The concept of taking on provisional basis has been done away with. What is important is they have amended the word take with the word avail. And then the notes and the memorandums gives that change of word from taking to availment as doing away with the concept of claim. Now, I'm sure this will give a lot of questions and possible litigation, distinction between taking, availing, and utilization. We used to generally distinguish between availment and utilization. We would generally put taking and availment into one basket. It seems that this amendment and this clarification, or the purpose of amendment, possibly will throw some litigation on this. The last amendment on GST, on input tax credit, government is going to have super overriding arching empowerment of prescribing the maximum proportion of output tax liability that can be discharged through using the input tax credit. They will prescribe, currently there is no prescription, but possibly to a class of registered persons or to a registered person or by registered persons, there may be an embargo as to how much portion of your output tax liability you can pay using credit and how much possibly compulsorily may be required to be paid in cash. But that's a empowerment which has been taken in the GST law. Coming to filing of returns, very important piece, though small from a compliance perspective. There are two filings which happen. GSTR 1, which you file from disclosing your output supplies. Second is your monthly return. Now, what the law is saying that if last month you have not filed your monthly return, this month the portal will not allow you to file. The new amendment which is saying proposed is that if you have not filed last month's GSTR 1, this month's GSTR 1, you will not be able to file. If you have not filed last month's GSTR 1 or the GSTR 1 you have not filed of this month, you will not be able to file 3B and vice versa. So the watertightness is done that if you don't file GSTR 1 of one particular period, you will not be able to file 3B. And if you not file 3B, you will not be able to file GSTR 1. So I think this is very stringent provision. If somebody wants to at least make disclosures without payment of taxes, that will not be allowed. Qua payment of taxes, one good relief provision. The fungibility of electronic cash ledger was brought in last year. But what is brought this year is, proposal is that if, for example, I'll explain very well an example. I'm in Maharashtra, I'm in Gujarat as a company. I have paid certain excess cash in Maharashtra. Now I will be allowed to transfer that cash to my Gujarat registration. So that's a welcome step. And the law automatically provides that if you transfer from Maharashtra to Gujarat, it will be deemed that as far as Maharashtra is concerned, having done the transfer, it will be deemed to be a refund. That is an enabling provision. In the last GST Council meeting, it was proposed that Section 53, Section 50, subsection 3 would be amended retrospectively with effect from July 1, 2017. And that effect has now been given in this finance bill. What it means is that interest shall be payable only when ITC is wrongly availed and utilized. The emphasis was on the word and. Currently, the way the law is worded, though we have been arguing from an interest levy perspective, but if the credit is wrongly availed, then also interest was payable. It is a welcome step emerging from the GST Council meeting. Also, they have clarified that the rate of tax shall be 18% and not 24%. Coming to customs, I think Arun hit the nail that overruling the canon decision of the Apex Court. What was canon decision stating? The DRI had issued the show cause notices. And the question being asked there was, before the Apex Court, is DRI the proper officer to having the powers to issue the show cause notice at all? These provisions now proposed, which would be applicable from the date of enactment of the finance bill, overrule the canon India decision by the Apex Court. What is now being proposed is that the officers of DRI, the officers of audit, the officers of preventive are included in the class of officers. They will be getting powers from the board or by the principal commissioner or commissioner of customs as to what are the assignment of functions to them. Not only that, there is a provision to validate in respect of any actions which are taken by such officers prior to the date of enactment of the finance bill. Further to that, they have also said that to delineate the criteria which the board may adopt while assigning the functions, will it be limited to territorial jurisdictions? Will it be limited to certain goods and cases? The answer is no. So what is being thought through is that in the regime of digital, in the concept of faceless, the officers could look at particular industry and a set of officers, whether it's in your jurisdiction or not. He can look at the inquiry, he can look at from a preventive angle or from investigation angle to a particular set of industry, particular set of goods being imported. So these are very wide powers being given to officers, including to DRI, audit and preventive, overruling the canon decision. The next important amendment is qua the jurisdiction of the original function. What used to happen is that somebody has passed the assessment order. Later on, let's say some other officer or DRI does an investigation and they do the reassessment. What is proposed is that once they are doing their findings, they shall give their report to the original jurisdiction, who then will do the reassessment or adjudication. With respect to valuation of goods under the customs law, there are provisions as to what the rules will prescribe. There's an additional condition which is added in section 14 of the customs to state that the rules now can provide additional obligation on the importer in respect of goods imported whose value is declared not being considered correctly. So as an anti-avoidance measure, if the government believes or if the officers believe that the value is not declared correctly, then the valuation rules will be amended to say what are the additional obligations you will have to disclose to the tax officers to prove that the value is correct. Very important amendment under the customs. Advance rulings will have a validity of only 3 years now under the customs law. If there is a change in law or change in facts, then the advance ruling will get limited to the change in law or the change in fact itself. So it is 3 years or change in law or change in facts, whichever is earlier. And for advance ruling which are already pronounced, the 3 years will start from the enactment of the Finance Bill 2022. Custom duty rate changes. I said this was one of the hits. A comprehensive review was undertaken. More than 300 exemptions were supposed to be looked at. What we understand now, more than 350 exemptions have been considered, looked at, they've been withdrawn. The withdrawn has been such a manner. What in customs we have is some few of our audience who may not be aware that you have a tariff which will give you a standard tariff and then your exemption notifications. And to identify the rate, it becomes really a cumbersome exercise because the exemptions notifications are numerous in numbers. What the exercise has been taken is they've withdrawn the exemptions, amended the rate of customs in the tariff itself. This simplifies when people are looking at the laws to determine the rate. Interpretation issues will go down. This change will be effective from 1st May 2022. In few cases, the custom duty rates has been increased. Edible oils, umbrellas, imitation jewelry, specified electronic items, solar cells and solar modules. This will be effective from 2nd February itself. In case of capital goods and project imports, the exemptions and concessions are pruned. In case of certain manufacturing raw materials for wearables, hearables, and smart meters, a graded import duty structure has been provided to increase. So from 22-23 to 25-26, how will the custom duty increase? That graded structure is provided already at this moment of time. In handicraft, apparel, leather goods, it is provided that for bona fide exporters, the goods raw material can be imported at concessional rate, subject to following the required rules. In excise, some tariff changes because of the ethanol blended petrol, and the unblended fuel will attract an additional duty of 2 rupees per liter from 1st October. The other two important changes, the SEZ Act is going to be replaced with a new legislation. Now, we will have to see what is the new legislation, but what is important from an indirect tax perspective is the entire reform of customs administration of SEZ will be undertaken. This is proposed to be implemented from September 30th. So I'm hopeful that we will get to see the new law by September 30th. The other is the PLI scheme. Since we deal with PLI scheme, I thought we should talk about it. It's really a hit scheme of the government under the Atmanirbhar Bharat. All 14 sectors, the applications which have been received for PLI is really a good scheme. We can see 60 new lakh jobs are going to be created. 30 trillion of additional production is expected. It is largely an import substitute. In all these sectors, the country is going to become self-reliant, and further to give impetus to the solar capacity in the country, and new scheme or an additional incentive is announced in the budget of 19.5 billion for the solar capacity in India. These are some of the aspects from indirect tax perspective.
Perfect. Perfect. Thanks, Uday. Thanks, Amitabh. Crisp, incisive presentations, which beautifully sets up the context for a riveting panel discussion. We have around 30 minutes for our panel. Uday, you want to go first or should I? Kavita, I think the surcharge and cess part is something that does definitely has a big impact for you. Uday, you just want to maybe set up that context in 30 seconds on the surcharge and cess, and I think they've possibly said, if I read the memorandum right, that it is per incurium, the court judgments are per incurium, and therefore this is how we read. The legislature is now saying that court decisions are per incurium. I found that a bit curious.
I think Kavita has a better say on this. I think she deals.
Kavita,
maybe I think she can. Yeah.
Kavita, if you could also set a little bit of context for us. Thanks.
Yes.
Yeah, sure, thanks. So, I mean, I think 2 years or 2.5 years back, there was this judgment of the Bombay High Court in the case of Sesa Goa, which said that, the definition of taxes under 40A, it does not speak of cess. And they also relied on a CBDT circular of 1967 and a Supreme Court judgment. And they held this decision in the favor of Sesa Goa, saying that cess can be claimed as a tax deductible expense under section 40A. This is when I think all the SSCs started putting forth this claim, not only for the past years, also for the going forward return of income when we were filing. We also took a position that it's a tax deductible expense. Though many, on a no-name basis, though many councils are not very positive about this judgment, we were told that this is either going to be rolled back through a retrospective amendment, or maybe a judgment from Supreme Court will clarify. But considering that this was so widespread, I think Finance Minister has plugged the loophole at the right time in this budget itself to say that taxes always included cess. It was always meant to include cess. And also, I think there is a recent judgment in Kolkata tribunal, if I'm not wrong, which is also clarified that the case was not argued when it was initially argued in the Bombay High Court. Maybe the memorandum was not read properly. The meaning of the cess or meaning of the taxes were not clarified clearly. So whatever it is, I think this will have an impact on the entire industry because it's a retrospective amendment, and most of the companies have been claiming this as an allowable deduction almost from the past 3 to 4 years. And yes, please.
Sorry, you complete, then I'll make only one sentence once you complete.
No, so I just wanted to add one more thing that, Being a retrospective amendment, I'm not sure what will happen to the penalty and interest implications because we would have reduced our tax liabilities by claiming this expenditure.
One makes all kinds of wrong claims, for the want of the word, and then you say it is a retrospective amendment. So I think the accountability has to be on the both the sides, and I'm not taking any sides of government or a taxpayer. But in the era of transparency, reducing litigation, coming clean, if you start going to comma and hyphen and taking a very when it suits you, say cess is a tax, right? Okay, under 265 or whatever, and then it doesn't suit, and some court takes a wall, and then everybody starts making a claim. In my view, it will be maybe penalty possibly could be defended because there was a court judgment, and based on that you took it. But certainly
would the government have factored in the additional tax revenues that is going to come because of this? Will it be substantial?
I don't think it will be substantial. I don't, unless the rampant use has been made, as Kavita is saying. But like on a software taxation, the government is going to pay back thousands of crores, right? And you said lucky that we didn't.
So this is the government. Right? This is the government payback now. Rakesh ji, any quick view on this? Rakesh ji?
No, I completely agree with Uday bhai. I think this is a very hyper technical view from the industry. And I don't think, Arun, means like there will very few assessees who must have taken this position, and most of these claim has come through additional claim in the appellate proceeding. And there are very few judgment which has come in favor of this. So I don't think there will be a big outflow, and company, there's a big concern for corporates also, because this is otherwise also, in my view, most of the company must have not factored this in.
Yeah. Give me five more minutes before we come to the topic everyone wants to hear about.
Only one thing to be added, Arun, is like very heartening to see that the way this memorandum has explained, means like they have given is very beautifully they have presented that what was the purpose and why this amendment. So they wanted to justify that why this retrospective amendment has
when you write so much, it can cut the other way also, when you go to the court.
No, but here Arun, you want it, right? This 199 page, the comment that I made consists of this, but you want to clarify. It can go the other way, no question about it. Yeah. But we always have been saying that the government should give some kind of a view, commentary on anything, either CBDT should give. So here the memorandum explains possibly what was the objective, and it's more clarificatory. You may take it as a retrospective. That's your problem, But if you made a wrong claim, inadmissible at that point of time, then. But yeah, I agree with what Rakesh is saying. I don't think there may be many people who would have, the tax collection may not be a big issue. Here, the message I think is clear that don't take a hyper, view if you want to reduce litigation.
Yeah, Rakesh, any view on section 37(1), where they've said that deemed always any payment illegal or illegal, even if it's the payment is overseas, the illegal payment, they've said deemed always, though the provision is applicable only from prospectively. So, Uday bhai, Rakesh, any view on that? You all think?
Yeah, I think there is some area of concern the way that law is drafted actually. So the way the explanation has been added, it says that is always deemed to have included, and now the provision is effective. So if you read the language of the section without getting into the when it is from which date it is applicable, then it gives the impression that it is retrospective.
Rakesh, I'm more also on the practicality of it. How will you, when you are making so many payments overseas, you're a large conglomerate, you make payments overseas. Now, how will you judge the illegality, and how is the department going to judge the illegality of payments made overseas?
Yeah, that is also very practically it will be very difficult, because when we even in the whenever you get your tax audit signed actually. Okay, so generally we will have to disclose what are and we'll have to rely on that your branch auditors and like that.
I think possibly how would you guess, Arun, would be that if at the time of making the payment there is some, and you knew about it, as an example, that there is something more fishy about it, right? And you still made a payment. A genuine taxpayer should be protected, But if there is some material which comes to knowledge that, look, when you made a payment, you are aware of it, a little bit, background, then that issue will come up. So genuine taxpayers should not have a problem in my view.
Yeah, I could just give an example. Lobbying, for example, is allowed in some countries, not allowed in some countries, maybe a gray area in some countries. Now, if you have a huge presence overseas, and if you make payments to lobbyists who then lobby for you with the senators, with the parliamentarians, or with the with the legislature there, then all of this can get into a gray area. I definitely see, I don't know how the department is going to judge the legality of a payment which has been made overseas, but this is interesting for sure, because a lot of our groups do have a huge overseas presence. I mean, we are all Indian MNCs now. Can we, Rakesh, you wanted to touch upon one or two areas, and then we'll go to the most exciting part of the budget, the virtual digital assets. I'm sure everyone here is a Bitcoin millionaire.
Yeah, so Arun, I think one of few very positive amendments actually. One is that at least infra industry's long time demand for this remove the anomaly on the surcharge on which we call a super surcharge on AOPs. I think some hearing has happened at government level, and that has been restricted to 15%. So that is very welcome move. The another demand regarding that extension of date for setup of manufacturing for 15% regime, though that industry's demand was for 2-year extension, at least 1 year extension has been granted. That was also a big relief, I think. So, so these are some very positive outcome in the budget here.
And on the charitable trust part, Rakesh, assuming that your group also has charitable trusts, Rakesh, I see that over the last 3 years, look at the trend. It's just running a charitable trust. I'm wondering, you need a separate tax rate for a charitable trust.
Yeah. And every year they are tightening the process actually.
Oh yes.
And this year, one of the amendment which say that if the donee fails to file certain returns or some return, the donor will not be allowed to claim the benefit. I think that we'll have to look at how it get impacted. How it is.
Uday bhai, any view on the charitable trust side? Any view, or we can skip that? You do.
No, honestly not.
No problem. Perfectly fine.
I practice more private trust, not the public trust.
Then,
sure. Just on a lighter note,
On the capital gains tax structure, the capping of the surcharge, Uday bhai, and this is for you. Just before the budget yesterday, I was on a panel on a business channel, and I said that the flight of millionaires from this country, the flight of the uber rich, that has just accelerated over the last 4-5 years. People want to shift for whatever reasons. People want to shift. People with wealth. A lot of people want to move their structures overseas, and which is keeping Uday bhai also busy. A lot of my friends busy. We needed to do something to turn around that sentiment. Do you think this capital gain tax, this relief, so to speak, this relief helps Uday bhai? And how is this going to actually work on the ground? This capping of surcharge on the long-term capital gains on all assets. Yeah, Uday bhai, for you.
So Arun, it helps. It certainly helps in more on the M&A transactions, as I look at it. So the focusing on, say, transactions where there is a shares being exchanged. It applies to all assets, all capital assets, but focusing on, say, shares or any instrument. For a private equity or a non-resident, the base rate is 10%. For a resident, it's 20%. With surcharge kept at 15%, it will become 11.5, plus you put the 4% says come to about, say, 12, whatever.
Yeah.
Instead of 14.5, 12 instead of 14. For a resident, it will come to close to 24 with 15%. Yes. And so clearly for resident, there is a 4.5% plus delta savings. For a non-resident, it is about 2% saving, which is significant in any transaction. Particularly if you look at the overseas laws, very few countries have capital gains. So there is always a demand to remove capital gains in India, which is not feasible because of tax collections, revenue compulsions, and various other measures. But certainly this surcharge was more on the super reach, right? So on the that getting capped, and there was another angle that dividend is capped at 15%.
Yeah.
And capital gain generally goes with it. So there is a theory in my view that on active income, if you earn, then you pay more. This is passive income. On active income, where salary or remuneration, your business, whatever, you pay more, that is justifiable. But on a passive income like this, dividend is 15 and capital gains was 37, and maybe that arbitrage was creating. So that is one aspect where the transaction will certainly be more favorable. I would have ideally liked that rate to be at par. Why do you have a distinction of 10 for a non-resident versus 20 for a resident? There is no justification.
Very well said, Uday.
And in fact, Arun, you may remember during my prior life in 2012, we had made that recommendation for a private equity.
Yeah.
And by chance it became bumper, it got extended to all non-residents.
Sure.
So and at that point of time, the transaction was more private equity than the 10 versus 20, and I don't know. So that 10 could have been done. So that difference still remains.
Why is capital gain important? Because it's the government's favorite section, among the favorite sections apart from the procedural. Someone said yesterday it has been amended some 40 times in the last 20 years. It's become so complicated that Uday will need a 6-hour session to explain the capital gains regime in this country.
Just one more thing, it applies to all assets. Just I want to say.
Sure. Yeah, so Uday, why this is important now is look at the number of unicorns in the last 10 months.
Absolutely.
Look at the wealth generation. Just one employee in one of the unicorns yesterday. I chatted with a friend who filed his returns and said that he's sitting on 300 crore worth of ESOPs. 300 crores. Today, 10, 20 crore, 50 crore ESOPs have become very common. And look at Freshworks IPO. You had 500 people who are dollar millionaires. And same is the case with companies like Zomato, which have listed and so on. So in the unlisted space, the other day, one of the edtech companies announced that 220 employees of theirs got an ESOP windfall, and almost 40 of them made more than $1 million or $2 million. So this is the unlisted space, which has been buzzing with action like never before in the last 20 years. Never before have we seen. So this is important. This concession will make a difference. I think Uday raised a very valid point. Is there a merit in reducing this long-term capital gain tax rate on especially the unlisted shares from 20 to maybe even 18%, if not 15? Why this disparity? And wealth creation, is the government going to encourage wealth creation or not?
So ESOP, in that, just one more point I want to make, since you said ESOP. On the capital gains, reducing the surcharge is a hit, but the taxation of ESOP itself is a miss.
Yeah.
So there is still a mismatch.
True. Because you have to deduct tax when you allot. So unless you're a
mismatch.
registered startup and so on and so forth.
Yeah.
Perfect. We move to the most exciting part of this budget, the scheme for taxation of virtual digital assets. Uday, we need to know, how is this going to work? Which are the areas which could be gray? Like, for example, if you have a loss in crypto, can you set it off against crypto gains? So these are some of the questions that are bothering people. Apart from, are you happy with the definition? Because trust me, when I read the first 2 lines of the definition, I understood that this will be need to be read some 20 times to understand. So how widely encompassing is that definition? What are the gray areas in the scheme for taxation of virtual crypto assets? First Uday, then Amitabh, and if Rakesh has a view on it, Rakesh is.
So interestingly, first, very smartly worded, virtual, I'm repeating, virtual digital asset is a separate definition under section 247A. 2 subsection 14 defines capital asset. So by that default, VDA is not a capital asset as understood under Income Tax Act. So the first point which I made briefly is that the surcharge of 37% will apply to VDA compared to this reduction in surcharge for capital gains will not apply here. Second, it of course, because there is no clarity from RBI, whether it is legal asset, illegal asset, leave that for the time being. Okay, RBI's views it is not legal. It is the matter has gone up to Supreme Court, and maybe the tax department did not want to lose out on the revenue. From an income tax perspective, whether income is legal from a legal asset, from illegal, accounted, not accounted, if there is an income you are earning like any other income, you should pay your fair share of tax. Okay, and that's why that law has come in today. Maybe the definition seems to be very widely worded in my view, but yes, when we read it for more and more time, you'll come to know practically encompasses everything possibly that could have come, and possibly we could see it when the government frames the policy, because it is encouraging blockchain, not the crypto trading, and clearly exclusion is the currency, Indian currency and foreign currency, as defined under FEMA. Then coming to the practicalities, a resident is taxed on a world income. Non-resident under Section 5 is taxed on income which is accruing or arising in India, or received in India, or deemed to accrue or arise in India. Let's focus right now on residents. If as a resident you have bought a crypto or a VDA as called understand under the Section 247A, you are taxed on a world income. Now where that money has come, where income is earned, no relevance. So any transfer of VDA will be subject to 30%, and as I mentioned, it will go up to 43%. Most of the people who would have invested would be under 43% bracket. Assume that. Now, number of people, so the other question which will come up is, people right now would have bought cryptos outside India, either under LRS, a direct remittance may or may not have gone, maybe opening a bank account outside India, and from a foreign bank account, which is permissible under FEMA, under LRS scheme, that money would have been invested. So the first question which will come up is this disclosed in your tax return? As a resident, there is a schedule FA called foreign assets. And like any other asset that you have invested outside India, is this disclosed? I think most of the people may not have disclosed, or maybe have disclosed in some clubbing together as other assets or whatever. And so those people will have a problem, but any income, and if you sold that currency. Now the question would be, how would tax authorities find out? That is a more a practical question, because under LRS, there is no tracking. In fact, RBI says, I don't care what you do with you, blow off your money also. They never bothered about it. The only way tracking came was about a year and a half back in the form of 5% TCS. But that also at the remittance level. But most of these investments would have been made out of the foreign bank accounts. So it would, if you don't account, it will become part of the unaccounted money. But the tax will remain at 43%. How and to what extent government has actually given a view saying that whether it should have been taxed as capital gains versus it should be taxed as other income. There's no other normal income maximum rate. What will happen to GST? No clarity today. And maybe Amitabh can throw some of the light on what he believes. There have been a number of discussions which have happened, but this is like any other passive asset from where you earn any income, and so you should pay the tax. Practicality of finding would be a question.
Amitabh?
So just to add to 3 points, one, Arun, what you mentioned about the definition. So what is interesting in the definition, if you see, they have said information of code or number or token generated through cryptographic means or otherwise. So it is not restricted to only generation through cryptographic means, even if it is generated otherwise. So one is any future technology coming in will take care of that word otherwise. Second, I think they are restricted by saying that non-fungible tokens will mean what is defined in the notification. I personally thought, though it's not my area of direct tax, But had they remained just silent on that, otherwise, till it is defined, people will argue that non-fungible tokens are not defined, so nothing is there. So they will have to define non-fungible tokens. When it comes to taxing, yesterday in the press conference, this question was asked to the finance minister that if it is not permitted, how come you are taxing it? And she answered it what they said, then nothing stops me from taxing it.
Absolutely.
So whether it is permitted, not permitted, that is not the reason to not tax it. Coming from a GST perspective or indirect tax perspective, when we look at Australia, Singapore, they started taxing cryptocurrencies initially at the peak rate of GST or VAT in their country, GST in both the countries. Later on, they realized that buying and selling cryptos is attracting 18% tax or 5% tax. And not only that, if I use crypto to make payment for my procurement of goods and services, it was becoming a barter transaction. And there also, there was a double tax. So those countries then migrated, or I would say graduated, to make it tax-free. If we look at UK today, because of a EU ruling, it is not taxable there. If you look at Canada, it is clearly saying for the purpose of indirect taxes, it is a commodity. So when it comes to direct taxes, the question comes, is it a capital asset? Is it an asset? When it comes to indirect taxes, the question comes up, is it goods? In our country, people have written that it is services, whether it is commodities. But the question still remains that why shouldn't it get taxed? When we look at GST, GST says it is a tax on goods and services. Now, if you look at the TCS decision on software, and if you look at the 4 characteristics, the way TCS decision did in 2004, the cryptos will satisfy those definitions of 4 criteria. So whether indirect tax is leviable in today's law, I would say the answer seems to be yes.
I just have one more perspective I want to put in here, and maybe a little controversial. Is that one way is an individual is invested through LRS scheme. Or let's assume what Amitabh said, finance minister says, I don't care, legal, illegal, permissible, not permissible. You use the ODI route to invest in crypto. So Indian company, you formed a subsidiary outside India for a genuine outside, your business. And it's permissible under the ODI route. And you had excess money. And that subsidiary invested in crypto. According to me, the law right now, as I read it, does not catch that. Because it's a non-resident, assuming there is no poem, all the angles are addressed. That's an money, that's an income earned by a non-resident outside India, although ultimately owned by you, right? And that's a non-resident income does not accrue or arise in India. So till that money comes in a dividend, this particular gain possibly cannot be done. I have not read it, but my view is that this could be unless you apply GAR and all those things. So that part is not addressed. And I'm told people have used the ODI route also.
Very interesting. I wonder if it's a currency and a digital currency, will we pay tax on a currency, GST? It's a very, very interesting point. And if we do,
it's not a currency.
No, it is not value. I understand, but what is Bitcoin? What is Bitcoin? Bitcoin is an alternate currency. That's it. I mean, can anyone argue that it may be legal or illegal, but finally it's a currency?
No, Arun, the way
it's a barter. I'm using Bitcoin to pay for something.
It's barter.
It's a barter, Arun. Go back to your old days. I could sell
rice
from you and buy wheat from you.
Yeah, it's barter.
So
that when you do a barter, that is not currency.
So let me put it this way. Let me rephrase it. If Rakesh tomorrow says that, okay, I am going to be like the new mayor of New York City, that I will receive my salary in Bitcoin. If tomorrow Rakesh tells the RPG group that my salary should come in Bitcoins, I have enough cash in my account, in my bank account, then what happens? I have been toying with the idea of receiving salary in Bitcoin, though my salary is not much, but still.
So the convert and let Rakesh answer.
RPG will be hit by that 30% tax first while paying salary.
No, Rakesh, you're.
I think it is interesting, and we'll have to see, Arun, how the law is evolved on this part actually. As we read in the newspaper, there is almost around 6 lakh crore rupees which is already invested in crypto.
Extraordinary.
So
extraordinary.
This is a I think this is the future actually. And I think someday or other day one has to decide whether it is legal or illegal actually. Okay, if it is government treat it is a legal tender, legal commodity actually. There is no question, there is no reason for taxing at higher rate.
Yeah, I really don't see, quite honestly, if the if the government in our country have this habit of sitting over such issues.
Why to define a separate rate and 30% and separate?
Yeah, and
in itself
it's a SAR. No, today in government's mind, in my view, the way I look, it is SAR.
No, it's a special.
Why is it a SAR? Okay.
But why is it a SAR? Because it's
because that's the thing.
In the first place. They are treating it like horse racing, speculative income.
Yeah,
I think that is
and more philosophy and the fundamental. If you are a libertarian view, if you take a libertarian view, that I don't want to use the currency of the Reserve Bank. I just don't want to use the currency. I'll use the currency which I want. And I think in US, things have gone so far ahead. Now with the New York City mayor saying, I'll take my salary in Bitcoin, and so many states in the US now going full-fledged ahead. The Federal Reserve too has not taken a proper view on Bitcoins. But with Tesla, the Tesla owner Elon Musk saying that Tesla has invested some $2 billion in Bitcoins, or has now $2 billion in Bitcoins. It's not investment. It's not investment. But I think we have gone too far ahead for the government to take any other view. If they do, it will be one of the most regressive and retrograde views, because the alternate digital currency is here to stay.
And I think another thing is that detail lies in the definition actually, and the way the government has kept the power to define any of the currency or any of the commodity as this digital asset. I think that may also we may see some action on that.
Yeah, if the government says that it will use blockchain to digital currency, I hope the Reserve Bank doesn't take 20 years to come out with that currency. Yeah. So let's go to the Kavita. You have anything to add on any other part? Because we have some audience questions which we'll take for the next 7-8 minutes and close. Kavita, any other part in that budget, either on the corporate side or on any of the procedural amendments, be it faceless or anything that you want to touch upon?
No, not really. I think enough has been covered. We can move to the questions, Arun.
Sure. So yes, interesting questions are on virtual digital assets. Any prepaid cards with foreign currency and INR, gift cards, travel cards, and so on, are they not digital assets? It needs exclusion of such digital assets. Who wants to take this up?
So that is where I was mentioning that government has kept the power of including certain assets as part of the digital assets. So
yeah.
This is some action.
And they also learn, right, how it unfolds. The government also will learn, so they kept the power, and rightly so.
Yeah. There is a question on 14A with respect to amendment in 14A. Should income have been accrued in the books, even if not received? Should it have been accrued in the books for the disallowance to be made? Or can the disallowance be made even if the income has not accrued in the books? 14A.
I would think the disallowance will be made now.
Even if the income is not accrued.
Yeah, that's what the amendment seems to suggest. Yeah. That's my view.
Yeah. If the MD of a company is provided with multiple cars, provided with lots of other perquisites, are such income partly taxed under salary? How will they be taxed as perquisites under 28(1)(4)?
No, 28(1)(4) talks of the 1 second.
The perquisite, I think that is salary is excluded from that.
Salary is excluded. Yes.
Perfect.
Sorry, I am a little basic guy. I want to read the act before I answer.
Sure, absolutely. So we can, And the next one is, does gifts or kits provided to customers meet in customer meets? In customer meets, does gifts and kits provided to customers, does it fall under 194R? 194R. Does give gifts or kits provided to customers, does it fall under 194R?
Arun, I think interesting question, but probably it should cover.
I think so. I also think so.
It should get covered actually. When you provide the gifts or kits or any kind of incentive or any kind of perquisite to your dealers or your agents, I think probably these, and that is why that most of the businessmen were not offering this or not putting that in the books actually. And that is why the 10%. That is where that I think 10% TDS provision has been made.
Yes, I think just to tracking mechanism. I think you just wherever
the question of the day is this one. It's the name is not there, but anyway, can people doing trading in virtual digital assets claim it as business income? Wow, that's a good one.
But so that's the question which will come up even for those companies, right? The Indian companies who are now trading into. Assuming you are saying, I am trading.
Yeah, we are trading. Let's assume, sir, Uday, that you are trading in virtual. That's the only.
The way I look at
additional question, Uday, on this. Suppose company does it the trading. So whether the 25% rate can still be applied or still will have to apply?
To me, it looks, I will need to read it, but the word uses any transfer of virtual digital asset. It doesn't say, and very clearly it is not a capital asset. So it's a normal income. That's why 30% rate. If this discussion was capital asset, then this discussion of capital
business and
capital gain was a business. It is simple, very smartly worded. Any transfer of virtual digital asset, and you make a gain, pay 30%. It's like a law by itself. A separate section taxing the virtual digital asset.
Yeah. Okay.
Clearly, it is not capital gains. So
last question, and we are at 11. And Saumil has put up the home screen, so he wants us to close. This is for Amitabh. As per current GST utilization law, IGST shall be first utilized. So if there is balance in CGST and SGST, but no balance in IGST, can it be treated as utilized?
Sorry, can you repeat that?
As per current GST utilization law, IGST shall be first utilized. So if there is a balance in CGST and SGST, but no balance in IGST, can it be treated as utilized?
Only if you use it, then it will be considered to be utilized. No, unless you use it, but it can't be deemed to have been utilized. The utilization is an action by the taxpayer. So can it be said to be utilized? I didn't get the question. The utilization is an act by the taxpayer. The only thing the law has enshrined, in which order will you use it?
Got it.
If I don't have balance of IGST, I will go use CGST and SGST.
Yeah, Amitabh is going to be one of the most sought after, people in the next 12 months. GST, sir, you must send 5 bouquets to the ministers and to the bureaucrats.
I will do that, and I'll send one to you also, Arun.
Please, no, I should be sending. No, I should also be sending because we run a very popular GST portal called gstsutra.com.
Yes, yes.
Last question, because this person has sent it for the second time, Mr. K. Pani. TDR issued by municipal authorities in consideration for acquiring land, embedded with value component of equivalent consideration of land payable, will also fall under digital asset. It seems to be more of a comment. Yeah, and next is sale of REP licenses and transfer of import licenses are also deemed to be digital assets. Please comment. Amitabh, you want to?
I don't think so. For both, I would say my immediate reaction is the answer is no for both, the TDR also and for REP licenses also, because they would not be regarded as a code or a number or a token. And when I look at cryptographic means, the word otherwise, I will read it adjustum generis. Yeah. So these are something which would not go into that blockchain technology and all those things. Finally, I have to see whether these are given through technological means.
Yeah, we will close with the last word, of course, belongs to Uday bhai. Rakesh, Kavita first, final comments, 10 seconds each.
Yeah. So I think final comment wise, Arun, we are, as an industry, we are very happy with the budget actually. Okay. There are a lot of intention is very clear of the government that, and the direction is very clear. I would say it is a booster dose for our doubly dosed economy.
That's a wonderful booster dose. Excellent. Kavita?
Yeah, so just to add where Rakesh left, yes, from an industry perspective, a good budget. And I would actually quote the Prime Minister, it's an Atmanirbhar Bharat ka budget, and definitely brings with it new energy and strength and growth and development.
Perfect. Yeah. Amitabh?
I will leave the last comment as a question. The fiscal deficit last year was pegged at 6.8%, and it is revised estimate is 6.9%. And this has happened only because of tax buoyancy. So my thinking is the focus ought to be tax collections, and which may come at the cost of ease of tax administration possibly.
Beautiful. Rakesh and Kavita just don't have any relief, I can tell you. Uday bhai, final word belongs to you. Uday bhai is, you know, what they call in English an ever optimist. In Hindi, they call it Ashawadi. That is how Uday bhai looks at life.
Absolutely, absolutely. And that's how I have survived. And I would say if industry is happy, we are naturally happy. Okay. Independently also, it's a good budget. And there is a lot of positivity around. And I think to taking cue from what Amitabh is saying, we like to focus as an organization on revenue and not on reducing costs all the time. So focus should be on tax collection, bring it, the growth will automatically come. So 9.2% even after all this is maybe it is lower than what was expected. But if you had expected 9%, you would have achieved anyway. So you always aim for the more. In spite of the pandemic, the growth has been good. And next year, 8.5 looks clearly achievable with all the the promises and possibly investing in the infrastructure and in capex. I think it is a journey because capex doesn't come in 1 year. This is going to go to the infrastructure, and capital investment will lead to growth, job creation, and automatically revenue generation. So to me, this looks like, forget this 3 trillion versus 5 trillion. I don't want to get into a politics of that, but certainly economy is on the right track. And as I said, there is a path.
There is a path. And if there is none, we will find one. In fact, let me close with my favorite, poem, Rashmi Rati, by one of the greatest poets the country has ever seen, Ramdhari Singh Dinkar, the late Dinkar. And he says that this is how the Tritiya, the third part starts. Varshon tak man mein ghum ghum, bada vignon ko chum chum, se dhoop gham pani pattar, pandav aaye kuch aur nikar. सौभाग्य न सब दिन सोता है, देखे आगे क्या होता है. That is how. देखे आगे क्या होता है. The next 12 months will be exciting. Till the next budget, till the next webinar, post-budget webinar from Taxsutra and KNAV. A goodbye from all of us. A pleasure bringing this webinar to you from Taxsutra and KNAV. We had a wonderful audience of 450 plus, and so many of you all have stayed back right till the end. And I've received a lot of messages, saying that they enjoyed this webinar. Our pleasure bringing this to you.
Just
Rakesh,
10,
Kavita,
10
yeah.
Sorry, just 10 seconds. I want to specially thank you, Arun and Tanaya and the entire team for the great support, and we really enjoyed. And it won't be till the next webinar, next budget, I'm sure will come in between also. Saumil and Tanaya, what would we do without you? Rakesh, Kavita, Amitabh, Uday bhai, many thanks.
Thank you. Thank you.
Thank you all for participating. Thank you all.
Thank you, everyone.